it's AI today, it was gig economy before, it was hardware, it all ebbs and flows. But that's why I think investor appetite for the local SMB or the operator-driven business, it is so defensible in this world when there's a lot of unknowns. This is a constant. This is a payment system for sure, but it's also the gateway to deploy all of the software products that we want. On a macro level in the fundraising environment, it is remarkable how in love with hardware investors seem to be now. Hi, my name is Alex Jekowsky. I'm the co-founder and CEO of Sense, and you are watching Macro Talk with Hope.
Alex, it's great to have you on the show.
Thank you so much for having me. It's great to be here.
So, huge raise, congratulations. What have been some of the biggest factors that have led to your growth so far?
Well, I think, taking a step back, the beauty of this industry is you don't have to really be from it. And I think that's kind of the function of small business in America in a lot of ways, is laundry really is this incredible byproduct of an entrepreneurial spirit that we have. And we've been seeing so much more of that in the last 10 years. It's why laundry was the immigrant owner mom and pop business, because you don't get into it because you love fashion and garment care. You get into it because you want to be an entrepreneur, you want to make money, and this is a vehicle for that to happen. And so when I think about starting the business 5 years ago, and what's been one of the biggest flywheels for us is just the entrepreneurial spirit in America that's been this just rising tide lifting so many boats, whether you're an independent one-store operator or trying to create a roll-up and buy a ton. I think that grit and determination of our operator base, and that has been for a while in the laundromat space, but certainly accelerating, has been this incredible embrace of technology that has been not only helpful that most of our demand is inbound from our customers, but also just been an incredible way for us to continue to scale to the point we are today.
Yeah, I think one of the things that I really became interested in seeing the announcement was this big boom that private equity firms and other investors have had in the sort of essentials frontline economy and industry. What did you see 5 years ago?
Yeah, I mean, look, I didn't get into this business because I love laundry. Like I said, my parents didn't own stores. I had no background in it. I dropped out of college my sophomore year to start a payments business focused around college campuses. I built that for about 5 years and ended up selling it. And it was acquired in 2019. And during that process, I had never worked in a corporate job before. I was going to become an executive. And I thought, well, how am I going to scratch that entrepreneurial itch? I'm excited to be an executive, excited to join the company that's buying my business. But what am I going to do that's going to keep that thing going for me? And I looked at hospitality businesses. You talk to enough people in the restaurant and bar scene that it's a hard business to do for a passion project, I'd say. And, long story made not so short, I had met somebody whose neighbor at their family's house in Boston was the former president of the Coin Laundry Association in New England, owned 4 stores, and he said, why don't you look at the laundromat business? And that's when I started. This was around 2019, late 2019, when I just started to sniff around just out of pure interest and intrigue of becoming an operator. And when I found 3 locations that I wanted to actually buy, I went to Coin Laundry Association events and got really deep in the business, worked inside of stores, just tried to meet as many people as I could in and around the industry. I found 3 stores that I thought would be great when I was living in San Francisco at the time. And the deeper I got in it, the more I fell in love with the vertical and in love with being a business owner. But at the same time, the more I thought, I'm a relatively sophisticated guy, I should be able to run these stores, but I don't know how I'm going to do it. I mean, you can't put a payment reader simply on a laundry machine. I couldn't use one of the generic point of sales to run my idea of a wash and fold business. Pickup and delivery was really unique in this space because there's 2-way logistics, not just from merchant to customer. So all these things made me realize this is an amazing business with amazing operators. Why is there nothing that's actually supporting the development and growth that this space is seeing and was seeing even 5 years ago, particularly in multi-store ownership on that side? And that's where I started to think maybe my direction and passion isn't actually owning the stores, it's building for them. So I can't say I was trying to see around some corner of private equity roll-ups or big multi-store or anything like that, because I think the backbone of this industry is really the SMB. But that's why I say I think it really is a testament to the caliber of the kind of operators trying to enter this space. And the demand is so high for stores. The supply is really the problem.
Yeah.
That's how I kind of found myself here. And I can try to paint a better picture than that. But it's just like an operator trying to operate their business, realizing there wasn't anything really that could help take what I wanted to do to the next level.
All right. So before we get to the big macro factors, I know you wanted to take the big step back to the first question and kind of give us context on how you arrived. The mechanics of your system is multi-level, right? You mentioned some of those on the machines sort of themselves, systems, maybe across multiple stores, but also you've got pickup delivery service and tracking and all of that. With your background also in payments, was that when the light bulb hit you? Was that there are lots of payments happening in this vertical that needs to be updated?
Yeah, I mean, I read something recently or listened to Sean McGuire from Sequoia was talking about how every great software revolution has been preceded by a hardware revolution. And I think that is the first thing that I saw in this industry. And I remember pitching customers early on who said, if you don't have hardware that can help me bring my machines online and take payments, then your software can only do so much. And then talking to investors who said, what are you doing building hardware? That's not the business to be in. You're tech, you're SaaS, you're fintech, you're all those things. So what we realized was one leads to the other. And you're exactly right. We saw all these bifurcated payments from online ordering to commercial invoicing to over-the-counter sales to the customer of a laundromat doing the laundry themselves, or the tenant of a multifamily property, or the student at a college campus, or wherever it is.
Yeah.
The RV park resident of the RV park. These payments are generally fragmented, and it's hard for a business owner to centralize. And so our goal, day one, is the all-in-one system. And we were probably calling ourselves the all-in-one system before we were even there. But that was the mission from day one, is if we can help you with your equipment payments, if we can then help you run your counter, if we can then help you do your online ordering and your commercial laundry invoicing, now we've covered the gamut of your payments and your operations. Then it's about how do we really take this to the next level. But the payments infrastructure and the hardware were the core for us to really do anything meaningful in this space.
Okay, so what I described, all those elements, and anytime basically a transaction could happen on the machines, at the register, you are soup to nuts. You've got a solution for that. The problem that a lot of people have with trying to sell to small businesses is that it's very intensive for your force on the ground. I, for a short time in college, try to sell Verizon business phone lines, right? So I think I did one day in the field. I was like, nope, can't do this. What's been your strategy to tackling these very individualized businesses who have very different needs, different sophistication levels?
Yeah, I mean, the first thing to me in a go-to-market motion is first identifying the retention and the dynamics of the market that you're in. We're very fortunate. We're including involuntary. We're at 99% retention or said 1% annualized churn. So for us, the customer success motion and customer outcomes, that team of mine is larger than actually my outbound sales team. But from a go-to-market perspective, again, this industry does have the nuance, which I didn't know first entering in the business, about the dynamics of distribution. You can't buy a commercial laundry machine from a manufacturer. You have to buy it through a distributor. And so they become incredible channel partners for us for at least part of our product, which is this hardware device that goes on laundry equipment. And not only are they selling those devices on our behalf and we support them as best we can, they also do a lot of the installation. And so where we have over this period of time been able to leverage is a really efficient go-to-market motion. And we've been very fortunate where even in the earliest of days, our investors have been the co-founders and C-level executives of Toast, of Olo, of Slice, et cetera, who have helped us kind of see around the corners of SMB, pounding the pavement, selling, and how to build that efficient motion. But because of the dynamics of the retention profile of our customers, along with the stability of the vertical, it's enabled us to take a longer term view with the customer and think about not jamming that wedge product that can then potentially lead to something else and have really unhealthy unit economics to try to get to this bigger story. But we know if we focus on what the customer needs and we do that discovery needs analysis early, that can actually help us build a greater longevity in the relationship. Again, for our business, it's net revenue retention and it's expansion within the base. And we're close to 70% inbound on that right now. And so there's a lot more greenfield ahead of us. But again, the dynamics of efficient hand-to-hand combat with the SMB, as well as committing to the industry and to the various components to it, i.e. the laundry equipment distributors.
Right.
It's a very unique dynamic that we have in this space.
You know, I don't know if you've gotten these videos. You must, because of what you do. Like millennials who are like crashing out and burning out, they're getting served these reels like, go buy this business. There's all of these businesses up for sale that need to be inherited and passed down, or, you know, they're really cheap. I mean, how much of that stuff is like misinformation? How much of it is true? What are you seeing in your own experience and working with distributors of how much inventory there is actually for this industry for people to pick up?
Yeah, I mean, look, it has a positive and a negative on both sides. And I try as much as I can, especially when I'm speaking to our operators and customers and interested people in the industry, to make as many parallels in the laundromat and laundry vertical as building a tech company or anything else, because the fundamentals are pretty similar. I think the hustle porn and excitement of starting some company in the software space has been the case for a while, and it's now starting in the SMB, buy a car wash, buy a laundromat, buy a dry cleaner, buy a this and that. And fundamentally, the thing that's hard is not buying or starting, it's running and growing. And so I think that the challenge that these videos and these influencers, many of which we power their businesses and are really close partners with, but the challenge is the easiness of it. Or lack thereof. I think people are thinking it's an unattended, buy a laundromat, put in your machines, and then it's all done and you don't have to do anything. And that's, the same in the world of a one-man or woman AI business. Like, you still work at it even if you have agentic infrastructure. It's about the level of effort and care you put in. So I think that on one side, it's really great to have people understand that the profile of a laundromat is not the sketchy, money laundering, dirty and unsafe place that I think are partially in people's heads, that it actually is the backbone of Main Street and a community center, and can be a huge profit center with a lot of and elements of goodness for the community. But it is not an easy business to just buy and let it run on its own. It can become easier and more unattended over time with the right tools and infrastructure. But the other point you mentioned is the big challenge is there just isn't that much supply. The demand has so far exceeded the supply in these small businesses, not necessarily unique to laundry, but I'm seeing stores that are bought with no payment systems and no technology at 3 or 4 times EBITDA or net income, and then 3 years later implementing our tools and our systems and deliver subscription revenue and automated payments and all these kinds of things, selling at 9 times. And so, like, one, it's an awesome thing that an operator can do, but 2, it shows there is so much demand for stores and so limited supply if you don't want to do ground up development and be 7 figures in investment already.
I think, and going back to the physical coin itself, there are some concerns that if we move everything to digital banking, right, we're still going to leave a certain part of the population out. A lot of people who, again, are familiar with these stores, have traditionally been used to it. Maybe, you've got a mix in there. How are you thinking about the mix of digital and still, traditional ways of payments, especially maybe in more rural areas of the country?
Yeah, I mean, I'll say from industry trends that we've heard and seen, the data, and while it's moving rapidly to hybrid, in the mind of the operator is exactly what you're saying. Maybe they'll have a mobile app option or something, but they want to enable coin. Why? Because they need to be able to keep cash. Not many people are carrying coins with them all the time. I mean, the name sense is we're going to get rid of your coins, but you'll still have some sense, right? That's like theoretically the concept. But
gotcha.
What you can see in this thing behind me, this kiosk, the concept is we want to enable, one, you to operate in a cash environment safely and reduce theft and opportunity for robbery. So have a wall-mounted kiosk where the cash can be kept, and then you can have kind of loyalty built in. And so the answer for us is, we do $120+ million of volume monthly, and that's growing exponentially. 50% of that can still be cash or less. I mean, it's climbing, but it will be a long time until that's 0%. And so it's about accepting cash in a way that doesn't make the cash customer feel like they're 40 years ago putting into a bill changer, getting 50 quarters to do their laundry. And so I think that that's the beauty of Main Street, is you can take the either the lowest income or the least technology savvy and still treat them like a modern day consumer. And that's part of what our product is trying to deliver. We have crazy AI products, I'm sure we'll talk about, and crazy payments products and all these things. But it's about optionality to the small business owner. You need to present, as a vendor, as a vertical SaaS company, we need to present optionality to these businesses, because without Toast, without Sense, without Service Titan, there are still restaurants, there are still HVAC suppliers and maintenance workers, there are still laundromats. So how can we elevate the customer experience? How do we deliver true optionality to the customer so they can focus on watching these Instagram videos about buying more stores and do it a little bit more effectively and scalably? So we are not out here to get rid of cash. We're out here to kind of elevate the experience of being in an environment where cash is still a meaningful factor.
That makes sense. But I also, what I'm hearing in your answer is, this is why investors are really excited to be a part of your story, because your target market, pretty unsaturated.
It is a remarkable amount of greenfield. And even when that baseline is there is so much more opportunity beyond in terms of business models that this industry, because of the dynamics, haven't been able to take advantage of. Like memberships. There's memberships for a car wash. There's memberships for a gym. There's memberships for almost everything from a retail perspective we have, except for the one place that you have to go to frequently in the laundromat, right? As one example, because how do you do memberships without infrastructure, payment systems, access management, all of that? One example, even delivery, unless you were to buy a van and hire a driver and absorb all that risk in CapEx, you couldn't get into the gig economy. But look at Uber Eats and DoorDash and all these amazing businesses that have turned on delivery for every single restaurant all over the country. Because in our industry, in the laundromat vertical and laundry overall, it's two-way logistics. You have to have somebody pick up clothes in a different state than they're going to be in at the end, bring them to a laundromat or dry cleaner, and then that same order gets processed over 24, 48 hours, whatever it is, and then have to be delivered back and have a consistent experience that is just like ordering food delivery or anything else. Ordering on Amazon has to be seamless for the end consumer. I just think that these are clear examples of how the laundry vertical has been held behind, but there are so many lessons to learn about the best ways to do things from all of these other retailers. And it gives that kind of, we're not inventing the wheel here, but taking the pieces that we know can work well and pairing it with the laundry and dry cleaning market.
When you are looking at an Uber or a DoorDash to partner with in this, gig economy, it sounds like you're obviously helping them. There's lots of talk, and we see the robots, in Los Angeles and in other parts of the country, Miami, delivering ice cream or whatever. People are worried that we're always trying to automate away these jobs. Can you shed more light into the conversations you're having with these gig platforms and how they're seeing this as potentially a new, vertical for them, for the, workers that they've got on their platform?
Yeah, I could tell you it was a really interesting start, because a Dasher or an Uber Eats driver had never walked into a laundromat or dry cleaner before, and in many cases have never gone to pick up an order at somebody's home. Right? You're usually going to the merchant and then dropping off at home. And so there's a lot of growing pains in training the drivers and all that. And obviously you have the cyclists who are, they show up, they're not expecting two 20-pound bags of laundry. You can't fit that on a bicycle. So you have these kinds of nuances, but I think the world of horizontal solutions, the DoorDashes and the Uber Eats, is as they scale and they have to, from a public markets perspective, but in general, they have to expand into the new markets. But the challenge for those is to be able to expand into a new market via the SMB versus being able to actually have the training and the infrastructure to work with an industry kind of powerhouse that we are in this space. And that actually enables these different groups to get into our vertical, and we want them to. We want the same access of vendors that we can put into our product that Toast and others have, because it makes the operator experience better. And we talk to vendors that are dying to get into this vertical, that have wanted to, but haven't been able to find their way. It's one of the reasons for our Series B we closed in 2024 that the lead of that round was Camber Creek. Basically, invented prop tech investing, or at least very early in it, because there's a huge real estate opportunity to connect buildings with the cleaners as a meaningful amenity for the tenants. And these are things that were not easily done before when you're going hand-to-hand combat as somebody trying to enter a new market or a new vertical. And that's the position. And part of the reason we raise this capital is we want people to know that the ecosystem of laundry is open. And there are a lot of exciting opportunities that horizontal players and value creators for SMBs can integrate with us and bring their value, and we can help distribute that to the small business owner in laundry, because we want to have that ecosystem platform and purchasing power to fight for our operators to get them the best pricing and the best access to technology.
When you were talking about the DoorDash integration, I was just looking it up. It's been, I guess it's the pilot was back in 2022, if I'm not mistaken. What's been the sort of adoption rate of it?
We're doing tens and tens of thousands of deliveries per month, not exclusively with DoorDash.
Through DoorDash. Oh no, you mean just
through gig providers? Yeah, we can segment it based on where you are, what your strategy is. Are you looking for distance? Are you looking for price? Are you looking for different things in cities? There can be different rates through different providers based on legislation. So it could be different providers. We started with DoorDash, and they really pioneered this concept of two-way logistics with us that they hadn't really done. And so it was a very kind of hacky system. The adoption rate for the operators has been great. It's been enabling them to get into this concept of delivery. I will say that our advice to an operator is, if you're not ready to do delivery, turn on the gig economy. Once you get a hefty amount of orders, you can start to build a route, and then it may make sense to own your own logistics, because you can expand maybe your market. You can start to get into commercial laundry because you have the vehicles and the vans. Our average ticket for self-serve, somebody doing the laundry themselves, is roughly like $12 to $15. When you're doing wash and fold and you're doing something over the counter for laundry, it's around $27 to $30. For dry cleaning, $50 to $55. For delivery, even in wash and fold and general laundry, $75 average ticket. So you can take a wash and fold customer and triple the average ticket by offering that service, but that means you have to start marketing and you have to be running a delivery business. And so that's where some operators, right, they need to be able to kind of dip their toe and get started in a way that doesn't present a huge amount of financial risk. Since we've launched, I don't know, hundreds of thousands of deliveries we've done since we launched that product. And while sometimes frustrating when competition copies what you do, the goal is that we can pioneer these things, these ideas and these features. Our competitors will copy us, but at the end of the day, that's a great thing. We'll work for a year and a half to perfect something. Everybody else will be able to leverage it from there, and that's the game. We have to elevate the entire industry who's never had access to these things.
Yeah, your competitors, Wash, Dry Fold, and also Clean Cloud among them. Looking through some of the Reddit posts around this system of integration with DoorDash, it does seem like it's fairly interesting for a lot of people. I think it also, some of the posts that I'm looking at is really comes back to like the payment itself for you guys, SaaS. Some of these folks in these posts are saying that Sense definitely seems more expensive than, some of the other providers out there. And I was wondering if you wanted to comment on that. A SaaS platform for an enterprise software company, like they get that. I think back to Main Street, business owners, entrepreneurs, they might not be as equipped to handle some of the increasing costs or just this type of system in general. Can you speak to kind of what you're trying to do in terms of pricing with SaaS, especially for this very Main Street customer base?
Yeah, 100%. When we started the company, we were one price and everything was all included. We didn't want to spend time, deciding this feature was going to be gated, which one's going to be flagged. We didn't want to do that. So we were probably the second most expensive product in the market, one price, regardless of the features you wanted to use. You just had access to every single thing we had. And I think it was about a year and a half ago, we started to kind of tier out our product and enable you to select modules, point of sale only, delivery only, marketing only, things like that, as a way for people to kind of decide and choose their optionality. And I think what we really focus on more than anything else on price, and I think what's important for all vertical SaaS, is price is driven by value. And what's been important for us is to measure the data on, are people spending too much money on a product that is not delivering the same kind of value? And are they spending too little money on the product that's delivering the most value? And I think what I've learned the most from companies like Toast, I think, is a great comp in what they've done in their pricing, constantly tinkering with their pricing on freemium, free models with high transaction fees, add-ons or finance your hardware altogether, or whatever it might be. Sometimes it's kind of robbing Peter to pay Paul on how pricing can be set up for some of these.
What do you mean by that?
Meaning that I'll give you free hardware, but won't discount the software, or I won't give you free hardware, but I'll discount you this software at this time, because at the end of the day, the economic model that we're trying to achieve on a payback period basis is a number. We're all trying to anchor for the number. So if somebody gives away free hardware, it's because I'm trying to get to a number on SaaS and a payback period that matches this time frame. And my cost of marketing will be X if I can turn this on, so I can actually lower my marketing dollars to convert that customer. I'll lose money on the hardware, a less valuable revenue stream, as I think a lot of people think hardware is. We would argue differently. In order to get that. So, but I'd say on pricing, it is something we're constantly looking at, but not looking at it to be the cheapest. We want to be affordable and accessible. And so for us, pricing is the exercise of understanding what value are we able to create with our slew of products that we have available to our customers now. And something surprised us where we didn't know the kind of impact this product would have. And so maybe we've been drastically underpricing it, but another product we were really bullish that would have the greatest impact on revenue for a customer doesn't. And so it's that constant understanding from the customer of where's the value coming from. We don't just try, it's not a race to the bottom for us on price.
Well, say more about the hardware piece, where you were talking about how it could be valued differently, or more people are undervaluing it. Share with me how that is a catalyst, because I'm also looking at your LinkedIn, and one of your followers commented on one of your recent posts. He said, if you can add hardware and many can't, you will quickly find yourself in retention heaven.
I think there's a lot of truth to that. I mean, we have 100% retention for customers that have our hardware on their laundry equipment, as you can kind of see up here. Now, I'd say that, again, I'm passionate about hardware, even more so given how much pushback we got when we started the business with hardware in it. Because we didn't, the classic vertical SaaS point of sale SMB tech play is software, has always been. I mean, the hardware is a Android point of sale, right? That's just a means to an end.
Yes.
And so we didn't fit in that perfect box for a lot of investors of why aren't you just, lose money on the hardware, get land and expand with your software and only focus on that. But for us, this industry has a different component of hardware, right? Most point of sale terminals, you have one, maybe two payment readers at that location. And then maybe
the restaurant.
Yeah, maybe you have 6 handhelds at a restaurant going around. That's it. My average store has 50 because I need a reader on every single machine. And then there's also some over the counter, and then maybe some at a kiosk and all of those kinds of things. So, and also hardware in this space is not just to take a payment. The relationship between the customer and the order at a laundromat is so much greater because they're not just pouring a cup of coffee and walking away when it's over the counter at a laundromat. I'm giving you that payment, I'm paying, but now there's a process that's gonna happen over a 24-hour period, and there's preferences and all of that. So I'll get into Watchful in a minute, but for the on-machine payment devices, it's not just accepting a payment, it's knowing what happened and why it happened on that machine in particular. For a laundromat, the machines are your greatest employees. You need to know when they're out sick. You need to know when they're stealing from you, i.e. not working, but taking payment. You need to know when they're delivering bad customer experiences. You want to know when they're running. You want to know this information. In our AI phone system, a lot of the questions are, what machines are available? Is this machine available? It's my favorite. And so we need to bring the physical world and digitize it. So this is a payment system for sure, but it's also the gateway to deploy all of the software products that we want. And I think maybe I didn't explain it well, but I think also people didn't understand the value of hardware as a data collection tool for the small business owner beyond just the payment gateway. And so we can sell this at a hugely profitable margin while also being the most affordable hardware device in the space. And it's a meaningful cash flow driver to our business, which is great to have on a gross margin basis, but it also enables us to lower that cost, still continue to push these products through distributors, and deliver an immense amount of value. So an operator spending $50,000 on our hardware won't even blink. That might be the cheapest quote that they get. But then on $149 a month on software, they'll say, wait a second, I need to understand the value that I'm getting. Because even a great laundromat might be 50% of their revenue is the counter, and that would be a lot. A lot of times it's 10, 20% of the revenue might be over the counter, and a lot of it is going through the machines. And they're getting so much value out of the product there, they have a bigger appetite to invest in the best quality products because of what it can do for them. So hardware has been so core for us, and it continues to be. Again, it could be chips and things like that, but bringing in a rise of digitization and AI, bringing the physical world to be part of that, hardware is required and a big part of our business.
So let's continue to extrapolate what you're working on, what you're seeing, the success that you're seeing to the broad macro environment. You already started to go down this direction, so I want to continue to go down it. And I keep going back to this, how you're selling SaaS to Main Street, because, with AI now being much more ubiquitous and consumer facing, if you're a chat bot or a chat agent like the ones that we know that are out there, there's some familiarity with it, I think, from that perspective of now people are actually paying for SaaS. Like it never, I mean, we are labeling it differently maybe back in the day, like streaming is SaaS at the end of the day. Instagram is free or whatever, but like Twitter now, if you want verification, like, or whatever, like that's now people are getting more to SaaS. Is there anything else that you want to share for other business owners or people who are looking at the space and thinking, I have a product that I think could be great for Main Street as a SaaS product? Any other tips or strategies that you can share to help them understand how to sell into the space?
Yeah, I mean, I think there's tactical things that have been really helpful for us. There's features and products and strategy around that. I think the first thing that, and I know I shared this with you earlier, but it's when you want to get into a vertical, even if you have a goal of going horizontal at some point, but if you want to kind of commit and make a bet to the small business owner, what they, in my experience, really care about is, do you understand my business? Small business owners love to talk about their business. They don't love to teach their vendors about the business. So every Sense employee, when they start, has 45 days, they have to run the counter at a local laundromat and work there. They have to interview operators. You can expense all your laundry and dry cleaning if you send it to our customers, because we need our employees, whether it's me, my COO, co-founder, whoever it is, down to an IC, an implementation specialist, support specialist, whatever it is, you need to know what it means to be a customer of that business, an employee of that business, and an operator of that business. Because most of our operators don't want to be the employee. That's why they bought the laundromat or bought the dry cleaner. They want to go and play golf, or they want to build their empire, or they want to spend more time with their family. That's the reason they got into it. So you have to empathize with their goals and strategies, how they want to operate their business. Maybe they want to scale and grow. Maybe they just want to keep their 1, 2, 3 stores. And then the employee, they're the people using the system. So we built this amazing business management tool for the operator. They can sit at home and see everything. But if the employee doesn't want to use it, you'll get no buy-in and engagement. So checking in with the employee, knowing what it means to be an employee, see that experience on the point of sale. I think building for the buyer, not the user, is a big challenge. I saw that in enterprise, in the higher ed space, where people were building for who they were selling to. Students kind of had to use it, but that created a lot of room for an incumbent to be there. So I think for somebody getting into SMB tech, and again, we learned this from, I think, the best in class vertical SaaS companies, is making the commitment to the industry, to understanding it at every single level. And that buys you a lot of, I think, earned trust with the business owner when you're starting something fresh. We had some operators that were excited I had an operator that would just get on a weekly, called us for 8 months before they were ready because we didn't have the product they needed. But they were willing to do it. I did a podcast with an operator early on. I think it's a little bit of a stress, who said it was a divine intervention that we existed in the space, because small business owners want technology. They don't want to make their lives harder. They don't want bullcrap. They don't want somebody sitting in their words, the ivory tower, building because they can. And I think that with the rise of AI tools and how complicated it can be for the small business owner or minimum wage hourly worker in the location to embrace those tools comfortably, it is on the vendors to make sure that you're pricing correctly, you're guiding correctly, and you're building for them, because they will lose a lot of money spending $5,000 on somebody to help them become AI proficient. In the same way that they lost a ton of money on people getting their IT services or getting their website or getting something that, So anyway, I get.
So understanding the industry, understanding the business. Just really quickly, are you powering actually like hiring and staffing and management of that system or no?
Today, no, not on like temp workers and gig workers or staffing, things like that. Interesting, and we partnered with a lot of groups to help. I mean, finding help for small business owners, particularly laundromats, are challenging because they don't have a lot of the infrastructure of employee benefits and things like that. We do like time tracking and task management and things inside of the store for the employee, and payroll reporting and integrations with payroll providers. But we don't do the.
But you don't process the payroll. You don't process the payroll now, sir, right now.
Today, no, and we've looked at it as a product. Some of my advice to business owners is it's complicated, and we didn't want most of our support to be payroll-related questions.
And then just back to what you talked about at the very beginning, you have more people working on the retention side than you do outbound. Can you share kind of like a breakdown, like how many people are actually allocated to both teams?
Well, we're a pretty lean business.
Yeah.
We're not at 100 million yet, but we're closer to that than other numbers. And we have.
You mean ARR?
Well, at least how we finished 2025 in GAAP revenue. And I'd say that with that being said, our target is always $1 million of revenue per every one headcount. That's the target. We've got about. We're not exactly there, but pretty damn close. And we've got about 85 employees in the company. And so we're a remarkably lean business. I wouldn't say purposefully. Sometimes I look at big companies with all their employees and I don't understand what everybody does at these businesses. But and we're hiring more this year for sure. But so on that size of team, I think we probably have 10 or 12 people in customer success, and we maybe have between 5 and 7 in direct sales motion. We have some distributor partners, about 4 distributor partners. Got 2 people on my marketing team. We're generally pretty lean across the business, but I would say that our CS function is less about, yes, net revenue retention as far as how are we growing our customers from that perspective, but really our customer success folks in the business are outcome driven for our operators and designed to be fractional business partners. We don't want them to be like tier 1 support. We want to have that channel through support, but we want a business owner with an idea or a feature request or a goal that they have to be able to partner with their Sense customer success manager for us to help map out the features we have or what it will take to get there. So somebody says they want to launch a pick-up delivery business, or they hate that they get 50 phone calls a day to their personal cell, or it goes to the store and their attendant doesn't pick it up and they think they're losing revenue. Okay, great. Well, we know that for pick-up delivery, you should launch our dispatch product, and we can help you with your website and SEO and ADA compliance, and we can then help you launch marketing campaigns. You don't have to lift a finger. It's all automated, all of that. And you hate the phone situation you have going on? Like, I can help you with that. Let me tell you about Sense Assist. Or here's a great partner for marketing and an agency that we work with that's been really successful. Or let's talk about how you're spending your time and how we can actually help you build better culture for your laundromat or dry cleaner so you can retain your employees better. And maybe we set up a training with them and, here, let me connect you with another. Like, that's the kind of stuff that delivers the retention, because the product, people like to buy from people they like.
Yes.
And that is, it's hard to hire on that index, but culturally, we've been able to kind of deliver an environment where our employees just love our small business owners.
The other, I think, thing that I was hearing that you are targeting for that I think a lot of people are asking tech companies especially is that average revenue per employee. Long gone are those ARPU days, and now we're really targeting the metric that you just mentioned. And this goes back to sort of how we're extrapolating your business to what's happening in the macro environment. Was that a very important question that investors sort of were asking you as you were growing and trying to scale? Is that a number they were focused on? Are they focused on, obviously, margins maybe a little bit later on, but in this environment to raise this amount of money, we're no longer in ZERP, right? We've got the K-shaped economy going on. We got all kinds of volatility and all kinds of daily uncertainties around the economy. Tell me more about the numbers that your investors really wanted to see from you.
Well, I'd say that, look, it was a very competitive process for our Series C, and we selected Sumeru because I think they understood the market, understood our opportunity, and they were not pushing us to have a particular number or to speak to a certain kind of metric. I think they just knew what our mission was for the vertical, and they have done this before in others in companies they've invested in. And so I think there was just an immediate alignment. I never felt during this fundraise process, as I have before, but I never felt in this fundraise process that we had to be a certain kind of company with a certain kind of profile. And I think the approach from Sumeru, looking at what is sense and how is sense in this industry going to be successful versus let's create a box of what we think best looks like. And if you don't fit it, we're going to make you fit it and change your business to fit it. And when we first started Sense, I wanted to be Toast. I wanted to be one of those companies. And so we thought, well, I've got to hire this kind of people and and this many people, and I have to build this product and launch this first to do all that. And when you realize we should be building the best product for our industry and our kind of business and our culture and our team, it's why I read some stat, and the percentage could be wrong, but there has not been in the last 10 years an increased percentage of startups successful. It's been pretty, a pretty similar clip.
Meaning there's a successful exit.
Yeah, exactly. And what it means to me is there isn't one way to do it. If we all figured out the way to build a great business and the one metric that if you had it, it was game changing and that's it, it would be a little bit easier. So for us, it was more of, we lived through 2021, crazy valuations, crazy access to capital. We raised our Series A in that time. And then once kind of the winner, the tech winner started to hit, we realized, and we were spending a lot on hardware development, we realized, wait a second, we need to focus more on what kind of business are we trying to build? What does our hardware look like? What does our go-to-market motion look like? It's not as many salespeople pounding the payment. There is a distributor motion here we need to be leaning into. Hardware is a different kind of business here than others. So I think dollar per employee, definitely, I think a metric people like to hear. I'd say net revenue retention was the one that, and gross revenue retention were the two, was that's the leading indicator is your business healthy?
Why do you think the environment is different now, that there's maybe less of this forced, mentality for maybe your business specifically, or if you're hearing it from your peers, what's changed in investors' minds where you're getting a little bit more leeway this round?
It's a good question. I mean, I think I found that this round in particular, there was, with the investors that we really enjoyed spending time with, it was maybe less leeway, but more passion of understanding what is actually going on. And I think that the challenge that we had in our Series B and before was, and the reason we went with Camber Creek is they really showed a commitment to understanding our business and our vertical. And there are a lot of parts of our business. I could pitch our business in a way that sounds terrible. I could pitch our business that sounds like the best business you've ever heard of. The key is for any of the investors that have had the conviction since day one is, do you understand it?
Yeah.
Do you have an interest of spending time to understand the unique nuances of our business? Because if you're just looking at the one sheet, I'll do the best pitch I can possibly do in 5 minutes and 20 minutes with you. But if you don't have the conviction to get deep, you want to understand the hardware play. You won't understand the competitive play.
So it sounds more like maybe this is a specific a reflection of your business versus maybe the macro investing landscape. But can you share anything else that you've heard from your other founder friends of maybe what the investing environment looks like now, where people are chasing that AI storyline and ROI?
Yeah, I mean, I think Dave Wan from Tidemark posted something, and I'll butcher it, I'm sure, but this concept of like going from kind of being the general ledger, being the system of record, and then being the system of action. And I think, candidly, I have yet to see a vertical SaaS company that has actually built true game-changing agentic infrastructure. I think today, a lot of companies are still in this ChatGPT or chat-based structure of insights, but not things that are doing things on behalf of the operators truly, the way that you're seeing in the small business vertical more, because you have enterprise people creating through OpenCloud, through other things, these incredible kind of agents running tasks all the time remotely in computers and things like that. So, but I haven't seen that directly yet. And we had a board meeting recently talking about, why hasn't that directly happened? And part of it is the small business owner reticence to really engage. But I don't know if I really believe that to be true. It's just, how are you building it in a way that's accessible to somebody who doesn't understand? And so, but I'd say again, on a macro level in the fundraising environment, it is remarkable how in love with hardware investors seem to be now. And
wow,
boy, I did not get that reception when we were raising.
And so let's talk about. So I mean, we talked a little bit about it before, specifically when it comes to the business you're running, and you had made some allusions to NVIDIA and chips, and so say more about this return to the love of hardware.
Yeah, I mean, I said earlier, and I think it is so well said by Sean McGuire, that all of the great software revolutions that have happened have been predated by hardware. The DoorDash and Uber and Spotify and these great digital products only became what they are because of the iPhone, right? And what we're going to see is, Anthropic and OpenAI and Perplexity and all these are only going to be and have only been able to be successful because of the chip makers and because of products like that NVIDIA and Intel and all these companies have built historically, not just for AI, but for the computer. And so I think what people are starting to understand, and it's not universal everywhere. I don't think Salesforce is going to be out making hardware anytime soon. But there is an element to, if you really want to kind of dominate either a vertical or a play or a strategy or build an ecosystem, marrying the physical and the digital world creates a moat and a retention strategy that is unlike what any feature can develop. And I think we're seeing this in AI. The feature moat is going to be less and less and less and less because of the agentic infrastructure that can be built. Do I believe that we'll have no computers and just agents doing everything and we don't need a phone? And not in the near term, not any term that I can see, but us launching some feature or module in our product for reporting is going to become less valuable and important standalone unless it's part of something bigger. And so that to me is where hardware plays. Again, it's not necessarily for everyone, but I encourage SMBs or any vertical where you're playing in the physical world, what can you deliver physically that can become game-changing digitally? Because those two often will go hand in hand.
So if you're looking at the next wave of this current moment that we're in, what do you see on the horizon? As we know data centers are needed. We obviously know there's still capacity issues with chips and memory chips too. I mean, there's all kinds of shortages, but what are you seeing in the marketplace where you think to yourself, wow, this could be a catalyst for the next iteration?
I mean, I still think we're kind of in the phase right now. Obviously, revenue growth is remarkable, and I mean, I heard the Perplexity founder kind of talking about his focus has always been on unit economics and having positive gross margin and the things that we're doing. I think like more and more and more, we're going to see people racing to kind of reconcile with gross margin as they're trying to build these businesses. I think we are in the ARR, I think. World right now where everything is how fast did you get there, and we're not so concerned about how can you maintain a certain caliber and clip of growth or what was your gross margin and spend to be able to get there. And sometimes it's remarkably efficient. I think It'll be interesting to see what the path to liquidity for these businesses are as they're raising more and more capital. The preference stack is greater and greater. Investors want a particular kind of return. You get so big, M&A profiles of who can buy you shrinks. And then, the first one to really go public is going to tell, I think, a really big story of what the public markets are thinking about growth profiles, cash flow, and EBITDA, and overall gross margin and scalability of that. So, I think we saw this with Meta when they invested so heavily in the metaverse, and so much of their messaging was, we're going to do this because it's good for the world.
They changed the entire name of their company. Like, it doesn't get more bullish than that.
Correct. But they did it also, I think, for the benefit of the world to see, is this going to be a thing? And so in some element, what these huge valuations and huge capital raises in the AI world is it's 5 years from now, are the players leading the same players? Unsure. And it's a remarkable thing. I don't know if we've ever had it in the history of our economy to have the size of market leaders have maybe the least amount of forward conviction that how the market stands today will be 5 years from now. Now, my 2 cents on it, I can't say I'm an expert, but it is a remarkable thing to witness. And that's partially why I think businesses like Sense are so important, but also have the kind of investor attraction that they have, because that stuff actually doesn't really matter to us. We get to, as an investor myself, I think it's interesting. As vendors and tools that we get to utilize, it's super important how efficient it's made our business end to end internally, and what it's enabled us to build inside of our product, for sure. But I think that we have to remember 99% of people in the world might not be the top users of Claude and OpenAI and all that, and they have daily things that they are still doing that need to be thought of. And so we try to kind of head in the clouds, boots on the ground as much as possible to realize, as cool as this agentic infrastructure that we're investing in heavily is, AI is not helping a low-income person who's deciding whether to feed their family or do their laundry. AI is not helping them fix that problem today. And so we need to focus on the customer. We need to focus on the operator, the employee, and the vertical in the industry. And as long as we're, continuing to drive the innovation, we should help steward those changes into this industry the way we have with other products. It's AI today. It was gig economy before. It was hardware. It all ebbs and flows. But that's why I think investor appetite for the local SMB or the operator-driven business, it is so defensible in this world when there's a lot of unknowns. This is a constant.
I love that. It's your AI insulated, and I think to round out our conversation in the last moments that we have, the broader economy is, as I mentioned, going into this very bifurcated shape, the K shape. Everyone's been talking about it. You've been hearing about it. Are you seeing that reflected in your business? Because you're really, in some markets, serving really the bottom. I mean, you tell me if I'm right or wrong. Does your business serve more of the bottom of the K in the economy?
Yeah, I mean, look, we definitely have the average laundromat visitor is probably middle to lower, or the lowest of income, middle to the lowest. I'd say we still have, super high net worth customers that are sending out their laundry and dry cleaning. And the dry cleaning has, again, I think a different kind of profile on that side. But I think
so you do have a little bit of that. What's the mix? Is it 80% the bottom K? 20 the top.
It's probably 65 to 75% the bottom. I mean, again, in cities it's different. In Manhattan, you could be spending $10,000 on a month on an apartment with no laundry, in it. So in different cities it can be different. We do, the pickup and delivery market in suburbia is pretty healthy and growing. But yeah, I'd say it's probably 65, 75% on that bottom side.
And when you do see the growth, does it reflect the bigger narrative that we're seeing in other industries? Is that the higher income consumers are maybe doing more drop off or asking for delivery, and the lower income are more squeezed? And so is that something that you're seeing also in your business?
The wash and fold. I mean, COVID was a big accelerant of the behavioral change of having somebody else do something for me because I don't want to be inside. I mean, we had people paying with welfare cards, EBT, for wash and fold.
During COVID,
because they didn't want to do the laundry themselves, or they couldn't for whatever it might be. And then that's stuck. A lot of our data would show third time somebody does wash and fold, never go back. It's just such an amazing experience. If you were doing laundry yourself before. So certainly that has been a nice flywheel. I think also you're seeing a growth in ability for operators and small business owners to control price. I think pricing is a big thing for the SMB. And the challenge that I think a restaurant or a barber shop or nail salon has is like the service is the service. And so as you're increasing price, you're not able to change the burger that you're serving. In laundry, it is similarly commoditized where laundromat A and laundromat B have the same, in many cases, might have the same machines and are using the same detergents. And so laundromats, suffer from something similar. However, a fun fact, because laundry machines were typically quarter increments, because they're all quarters, you add our system, now you can do 99 cents. So we could see 20% price increases that customers can accept. But the one thing that's, I think, such a greenfield opportunity in the garment care space is because of how poor the experience is for the end consumer. The operator, as they invest in their store by adding plants, by adding payment systems, by a little bit of music, a TV, whatever it might be, there's industry data to show their ability to increase price without losing customers. And so that's what a customer really wants at the end of the day. I don't care to pay more if I'm getting more. And that's what we're starting to see in the laundromat space. That is a growth of revenue, is the ability to increase price. But these operators are not increasing price just to be predatory. They're increasing price because they're investing back in their store and the community. And that is making a big difference.
Last question about data. I imagine there's going to be a point in time where you could connect this data to digital advertising and have very personalized experiences where Procter & Gamble could, send a digital coupon or things like that. Is that something you're working on?
I think that the world of data, one, absolutely. I'd say that small business owners are very concerned about their data. They are very worried about Big Brother taking their data, selling it, giving to another business owner, all of that. And so we did something the industry had never done before, which is this concept called Into the Fold. We launched last year. We do it on every laundry day, which happens to be tax day. I'm unsure why. But
like National Laundry Day is tax day?
It is on April 15th.
Some connotation there.
Exactly. Well, death, taxes, and laundry, I guess, are the constants. But so we started to do this industry report, and it was initially met with some pushback because operators are like, what are you doing with my data exposing this kind of information? And so we did it state level. We did it anonymized. We never, it was very protected from that standpoint. But we were trying to help operators actually operationalize and monetize their data. Think about brands and wouldn't a brand be interested to know how often their clothes are getting cleaned until they're not? Wouldn't a brand be interested in knowing to know like how clothes are treated and stained and all of these kind of details? I think that there's what Procter & Gamble is making huge bets on out-of-home laundry, right? These detergent and CPG companies have no idea what's being purchased in the laundromat. Most of laundromat customers are buying their detergents from Sam's Club or Costco or Dollar General, or there's very limited data and insights that other people can get into this vertical. And so we are very careful. We are probably the only company in the space with an IS&T team and like an actual data security infrastructure. But we're very careful with that because the operators own their data. They can ask for it to be deleted at any time. All of that remains true. But there's a way to help our operators monetize, make more money through those ad networks, through enabling them to monetize their data and the tools that they have. So I think there's a huge opportunity for it. We're evaluating those in partnership with our customers as much as we can because we're really the only ones positioned to help them in that way.
I love it. We're at the end of our time. Any last thoughts?
No. Well, first of all, thank you so much for having me. And I think this industry is not one that is typically talked about and is something that I think is thought below the toilets in many cases for people. But it has such an incredible impact to the U.S. economy, to the everyday worker, to anybody, honestly, in across the world. And I think that people talking about the industry to know that it is actually something worth paying attention to, not just because you got an Instagram ad about how great it is to invest in, but understanding that Main Street operators are the backbone of everyday American life, and the laundry business has been woven into the fabric of American culture almost more than any other business for 100+ years. And it deserves the attention from sophisticated vendors, technology, and to not continuously be underserved because of the role that it has. So I'm just glad to be able to have had this opportunity to highlight our customers and to highlight this milestone. So thank you so much for having me.
Of course. Congratulations on the raise again, and hope to have you back on real soon.